Good afternoon and welcome to Market Closing on our brand new collaboration between Business Today and India Today Television. It's been a day packed with action on the Dalal Street, from global market cues and policy signals to earnings, sector trends and stock-specific moves. We are here to bring you the full picture of how the markets perform and what it means for your money. So stay tuned as we break down the Sensex, the Nifty and the stories that are shaping tomorrow's trade as well. Also, don't miss the market opening tomorrow morning at 9 a.m. with Abha Bakaya, giving you the first word on everything that will move the markets. Let's first take a look at the top news from the world of business, markets and finance. Sensex and Nifty slipped into the red after early gains dragged by banks and heavyweight counters. Nifty fell below 24,600 mark, Sensex near 80,200. Mid-caps as well as the small-cap indices have been outperforming with modest gains. Gold hits a fresh all-time high level of 1.06 lakh rupees per 10 grams on the MCX, delivering year-to-date returns of 35%. The rally follows global trends supported by a weak rupee, hopes of a US Federal Reserve rate cut and concerns over the central bank's policy independence. After Fitch retains India's rating with stable outlook, expects FY26 fiscal gap of 4.4% despite revenue shortfall. US tariffs to have limited impact. At Semicon India 2025, Prime Minister Narendra Modi highlights Q1 GDP growth of 7.8% amidst all the global economic challenges, saying India has performed better than every expectation. Prime Minister Narendra Modi inaugurated Semicon India 2025 in New Delhi today. Union Minister Ashwini Vaishnav presented the first Made in India semiconductor chip. Prime Minister Narendra Modi said the world trusts India and is ready to build the semiconductor future with the country. Tesla's India debut struggles with just 600 orders since its mid-July launch, far below expectations according to news reports. Globally, the EV maker delivers this many cars every 4 hours, globally raising questions on its growth outlook. Let's straight away go across to the market check in the last half an hour of trade. Well, the Nifty has slipped below the 24,600 mark right now, down by about 0.1%. Let's look at even the Nifty Bank, the other major index that's also slipped into the red right now. The small caps and the mid caps, however, are some outperforming with some mild gains at this point in time. Look at India Wix. That's the culprit. It's moved up 0.8 to even 1% higher at 11.4 odd levels. Although FMCG, metals, real estate, oil and gas, these are the sectors that are still holding up in trade, but banks, especially private sector banks, financial services, even the autos and the pharma sectors, they've actually slipped into the lower zone as far as the last half an hour of trade is concerned. Which are the top movers on the Nifty? Well, you find a lot of power names like Power Grid is also higher by about 2.5%. It's the top mover today. NTPC is higher. Even the FMCG names like a Nestle or a Tata Consumer Products have been hovering higher in trade. But what's dragged the Nifty lower today? Look at the auto stock. M&M, that's the top loser, down by 2.5%. Dr. Reddy's Laboratories down by 1.8%. Kotak Mahindra Bank, Cipla and ICICI Bank are the other heavyweight counters that are extending some pressure. Let's quickly take a word from the top market expert this hour then. Mr. Sudeep Bandyopadhyay, Group Chairman of IndiTrade Capital, is now joining in to share with us his views on the markets. Warm welcome to you, sir. Thank you so much for taking the time out for this discussion. First up, last 2 days we've been seeing, a lot of enthusiasm on the back of the GDP numbers that came in as a big surprise. The markets were cheering on. Today we also did see that the Nifty managed to cross 24,700 on an intraday level, but towards the end we are again seeing some volatility issues. How are you looking at the market sentiment at this juncture?
Well, I think, this US tariff related issues are hovering in the background, and that is creating some amount of uncertainty. And it's also on the back of the fact that FIIs have been relentlessly selling over the past more than a month. And that has also led to some amount of destabilization. So, look, yesterday the US markets were closed, so FIIs were not around, and obviously Indian markets didn't get this to see the selling by FIIs. Today, again, I think things are opening up all over the world, and US markets are also open. So, some amount of selling by FIIs, I'm sure, is kind of causing the damage in the Indian market. Now, having said that, as you were just alluding to, domestic signals, domestic indicators are pretty positive, and the market, we believe that will not slip below a certain level. A little bit of correction here and there may happen, but the bias is definitely positive. And as soon as there is, some stoppage in selling by FIIs, things will start looking up significantly.
Absolutely. So, Sudeep, help us understand which are the top sectors that you believe are going to be taking the markets forward from here. We have seen enough, about 6 to 8 months of consolidation in the markets. Of course, the domestic cues are very, very positive. You just marked that out for us as well. So, from this time onwards till the end of the calendar year, we have the festive spirits also in the air. So, help us understand which are the top sectors that you are bullish on.
Well, one sector which we have been positive for quite some time has been construction, infrastructure, and related, companies. So cement has been our favorite for some time, and we believe that even the GST rationalization will help cement in a big way. So that's one sector. Construction infrastructure definitely needs to be looked into. Government is spending huge amount of money in capital expenditure. Budget has outlined 11 lakh crore of spending, and that is getting spent. So construction infrastructure is one segment which definitely will do well. Now let's come to what has happened recently, which is the GST rationalization, which is going to happen, in the next few days. And with that happening, I think we will see significant pickup in demand for consumer durables, FMCG to an extent. And I think these sectors also will start doing very well. Of course, this is on the back of the fact that we are heading into a festive season. Interest rates have come down, rural income has gone up. So I think all the positive ingredients are there to take these sectors up. I won't do justice if I don't mention BFSI here, because
Yes.
consumption demand, particularly consumer durable demand, also attracts demand for finance. And we also believe that overall BFSI, leave aside the unsecured lending book and unsecured lending part, which is going through its own set of challenges. Pretty much everything else will start looking up in the near fuure. Asset quality,
Sure.
by and large, has been good. Interest rates are coming
Absolutely.
down. So that's where it is.
Fantastic. Sudeep, hold that thought there. I'm going to be coming back to you with key sectors as well. As we do know that New Delhi is where all the signals are coming in from right now. At Semicon India 2025, Prime Minister Narendra Modi has underlined India's growing global credibility and economic strength. He did say the world trusts India and is ready to build the semiconductor future with us. The Prime Minister also highlighted India's robust growth story, pointing out that despite global challenges, the country recorded an impressive 7.8% GDP growth in the first quarter.
The world trusts India. The world believes in India. And the world is ready to build the semiconductor future with India. कुछ दिन पहले ही इस साल के पहले क्वार्टर के जीडीपी नंबर आए हैं। एक बार फिर भारत ने हर उम्मीद, हर अपेक्षा, हर आकलन से भी बेहतर प्रदर्शन किया है। एक तरफ जब दुनिया भर की इकोनॉमी में चिंताएं हैं, आर्थिक स्वार्थ से पैदा हुई चुनौतियां हैं, उस माहौल में भारत ने 7.8% की ग्रोथ हासिल करके दिखाई है।
So India continues to remain the fastest growing major economy in the world. But when we talk about the asset classes, while the equities are slacking, today it's gold that is shining the brightest. Gold is glittering like never before on the MCX. We've seen prices have hit a fresh all-time high level of 1,06,000 rupees per 10 grams. And that's a stunning 35% of a return so far this year. This rally, remember, mirrors the global trends as well, driven by a weaker rupee, the expectations of a US Federal Reserve rate cut and fresh concerns over the central bank's policy independence as well. Let me now go across to our gold expert of the day, Mr. Navneet Damani, the Senior Group Vice President and Head of Research at Motilal Oswal Financial Services, is with us to decode for us what is fueling fire in gold and what do we expect from here now. Good afternoon to you, Navneet, and thank you so much for taking the time out. Well, first up, list for us, 3 to 5 factors that are definitely behind this sharp rally in gold as well as in silver as well.
Well, good afternoon, Sakshi, and thank you for having me on the show. Things suddenly have got a little heated for gold prices. We've seen gold rally from about 2,800 to, say, taking a pause at around 3,200, 3,300.
Yeah.
But over the last couple of months, there has been a heated tariff war which is going around, and how it is going to end is what most of the market participants are guessing. Secondly, there is expectation that US might have to cut rates aggressively as their inflation numbers are started to tick up. Their jobs numbers are not as per probably what the market expectation or their expectation is. And thirdly, it is the need of the hour with sitting at a $37 trillion worth of debt. So it looks like they will have to switch gears and get a little aggressive in terms of rate cuts, which President Trump has been kind
Yeah.
of pestering about for some time now. And thirdly, the momentum has caught up very sharply, where de-dollarization has suddenly become the theme, where a lot of people are moving, trying to move ahead from the dollar towards finding their own currency. It could be a BRICS nation put together, or maybe some other party joining in. But this is now the kind of buzz which is
Sure.
going around the world. So these all factors have culminated in the last couple of months, which have led to the sudden burst of
Absolutely.
rally
So,
in
Navneet,
gold
help me
prices.
understand what's your outlook then on gold and on silver by the end of this year or by Diwali? What do we expect on gold and silver? The starting of the festive season is at a record high level.
Well, about a month back, we thought we had seen our run up in gold, and probably this is a time for consolidation. But things have changed very sharply over the last few weeks, which leads us to believe that 3650 on the COMEX, or probably which is about 5% higher from here, and maybe if the rupee is trading around 89 and a half, 90, then maybe 1,06,000, 1,07,000 is where we see gold prices heading around Diwali or maybe around Christmas. Whereas for silver, we've seen silver also participating just like gold and delivering about 30% plus returns in the last 6 7 months. It looks like silver has caught up the frenzy over the last couple of years of lull. It has now started to participate, and probably and could be an outlier vis-a-vis gold also. We expect the silver comfortably could be ranging in the range of 1,35,000 rupees, one lakh
Wow.
forty thousand rupees as we approach the end of the year. On the international front, maybe $45 is where we see silver probably
Wow.
taking a pause or a break by the end of the year.
Okay, so 1,35,000, 1,40,000 not ruled out for silver going forward from here, viewers. We are right now at just over 1 lakh level. So remember, silver is outpacing gold and it is expected to do so even going forward from here. For the first time, silver prices had crossed over $40, but the expectation is it can actually go on to cross the $45 a barrel as well as far as the prices are concerned. Navneet, we have some queries from our viewers for you. First up, we have this query coming in from Swati Mishra from Delhi. Swati says, I want to buy gold for my wedding coming in February. Should I wait for the rates to come down or should I buy prices at this stage? Well, tough question for you then, Navneet.
Well, with the kind of momentum and with the kind of 70% upside in the last 18 months that we've seen, it is very difficult for any individual to take a call whether to buy gold or not.
Yeah.
But having said that, she's got a couple of, say, maybe around 6 months. I guess there will be one chance where you'll get gold prices around 1,05,000, 2,000, maybe, or closer to 1 lakh rupees, where you
Okay.
should go and probably get in for the purchase. Do not wait for prices to about 90,000, where we don't see expect prices to correct very sharply now.
Okay, don't expect gold prices to correct too sharply. Only if you get a slight dip of around 1 lakh, go ahead and purchase gold for yourself. You have about 6 months, so look for that dip and then buy that gold. Sanjeev Roy from Kolkata has written in the next query. He says, where should I invest now, gold or silver? Which will give better returns by Diwali? So this one you partly answered also, Navneet. Silver, you believe, will outperform gold by Diwali as well?
Well, Sakshi, over the last many shows that we've done together, I've been always talking about being positive on silver. And over
Yeah.
the last maybe 12 months, we've seen silver outperforming. And to my comfort, today also, I feel that silver can give you about comfortably 10% returns from here on also. Even if there is a knee-jerk reaction, if prices come down also, it doesn't matter. Over the maybe 6 to 12 month period, prices are headed northward. So I would rather put my money into silver, maybe about 5% in silver and about 2-3% in gold is where the mix could be.
Sure. Okay. Let me just quickly bring in Sudeep first. Sudeep, I have to ask you, equities vis-a-vis gold, what will outperform in 2025? What would you say?
Well, I will definitely say equities because gold has run up a bit. And I mean, there is no negativity as far as gold is concerned. But the fact is, it has run up quite a bit, and I don't see it running up as much from here on. So that's the only reason. As far as equities are concerned,
Okay.
there is hope for
Still bullish on equities. All right. So Sudeep's take is equities, and I'm sure Navneet is going to be saying gold it is going to be. Well, thank you so much, Navneet, but for your insights and for answering all those queries. We'll thank you there, and we'll, of course, get you soon on another edition as well. Let's move across. A big shake-up could actually be coming on India's tax system, viewers. The government has proposed what it calls GST 2.0, simplifying the current 4 slabs into just 2. There's an expectation of 5 and 18%. Groceries and daily items could get cheaper, while a new 40% slab is also planned for sin and for luxury goods as well. The GST Council will take this up at its key meeting tomorrow and also day after. But all's not well as states seem unhappy with the revenue loss. So let's go across to our correspondent, Karishma Asudani, who's joining in, who was the first to bring us this exclusive as well. Karishma, tomorrow is the big day. What are the key concerns that states have raised about this restructuring?
Sakshi, well, good afternoon. One of the biggest concerns that the states have raised is how the centre is going to manage the revenue gap that is going to come on with this rationalization. In fact, we had reported a figure of close to 10,000 crore that could let alone come with the rationalization. Besides this, also there could be an additional amount in terms of doing away with the compensation cess. One of the options that states suggested was that government should put an additional levy on luxury or sin goods, which already will likely be taxed at 40% if the decision by council is approved in the next 2 days. Now, states, not just in fact of the opposition, but also of the ruling party, have actually expressed the fact that centre in the next 2 days will have to help in devising a plan in order to fill the revenue gap that will help them to go ahead with the rate rationalization exercise. No doubt, as Prime Minister Narendra Modi had said, and the central government has reiterated, that they are looking to boost consumption and bring down the cost of basic goods in the country, from that of, say, butter, ghee, parathas, cheese, or basic household items, which could now be, in fact, be cheaper than what they were earlier. But a big question on the revenue analysis, which have to be done in the next 2 days.
Absolutely. Thanks a lot, Karishma, for getting us all those details. Keep an eye out on the meeting tomorrow and day after. Big day for you. And of course, you'll be keeping busy. We'll keep coming back to you for all those updates. Coming back to Sudeep now. Sudeep, GST has been the big trigger that has led to the recent recovery in the markets as well and fueled some more spirits. With the GST rationalization, there could be increasing sales for a lot of these sectors. Autos are betting big on the festive season. We're also looking at consumer durables for a good festive season this time around. It wasn't so good in the previous one. Tell me, which are the sectors that will benefit the most from GST rationalization tomorrow and day after?
Well, definitely consumer durables will benefit. As I was mentioning, there is a whole lot of factors which are going in favor of consumer durable. On top of that, I think GST rationalization will definitely help buying of consumer durables during the festive season. Second, the small cars. I think that's one segment which is expected to benefit. So I'm not talking about luxury cars. I'm not talking about SUVs even. I'm talking about small cars, and there were significant challenges as far as small cars are concerned for both Maruti and Hyundai. And I think that's one segment which will benefit from GST rationalization. Third, I've
Absolutely.
already talked about construction and infrastructure, because cement and whole lot of other building
Yeah.
material prices will come down because of GST. So again, that segment also should get a boost.
Absolutely. A lot of us also look forward to construction and a lot of refurnishing, a lot of activities that happen. So all of that will also be in clear focus. Let's also talk about the auto space that is being seen as the big beneficiary from GST rationalization. But the eyes are on Tesla and not so much on the good news front, because Tesla's much hyped entry into India is off to a very slow start. The EV giant has actually received just about 600 bookings since it began sales in mid of July, far below expectations. Now, sources have told Business Today Television and India Today is that Tesla now only plans to ship about 350 to 500 cars to India this year. And Business Today Television's Chetan Bhutani is joining us for more on the story as well. Chetan, tell us what's really leading to this slow growth of Tesla in India, and what is it that the company plans now? I remember you were there at day one giving us all those exclusive details. A lot of people were thronging the showroom of Tesla in Delhi at the Aerocity as well. But seems like that enthusiasm has fizzled out pretty early.
Absolutely, Sakshi. We've been seeing the whole hype around Tesla and, of course, its entry into India. But what company officials have told Business Today that the amount of sales that they had anticipated has not fallen through. The initial projections of the company while entering India, while launching its first showroom in Bombay, was, of course, around 2,000, 2,500 units annually. But now it's fallen short by a huge number. Currently, the sales are expected between 550 to 600 is the number that we have been told by officials in the dealerships and other areas as well. But what's really hoping and what's really delaying its super exclusive launch that Tesla actually launched in India with is, of course, the taxation issues. Because remember, a Tesla car would cost you about 60 lakh rupees, and you get a very nice budget-friendly EV in a 22 to 30 lakh segment. In fact, if you want to go for a further EV, you have a Mercedes, Audi, and BMW as a premium option, which would probably cost a lot lesser. Also, secondly, due to the service sales network and heavy taxation issues, currently they are only operating and doing deliveries in metro cities for like Bangalore, Kolkata, Delhi, and Bombay. But they are initially about to begin its deliveries all throughout the country. But the core is on the Delhi NCR area and Mumbai area. So all in all, there are 3 to 4 reasons why it's having a delayed launch, and company like Tesla doesn't really believe in doing marketing campaigns to boost up its sales. So it's actually relying upon the normal way, the normal course correction for its sales. But as of now, the company has cut down on its supply to India. We are expecting now about 300 to 400 odd cars to be supplied every month. So all in all, these are the 3 4 reasons why Tesla is having its muted times right now.
Absolutely. Thanks a lot, Chetan, for all that update there. Just about 2 minutes to go before the market shuts shop. So let's go across to Sudeep yet again to understand what do we look forward to in the markets from here on as well. Big triggers will flow in from tomorrow and day after's GST Council meeting. Do you think, Sudeep, we have somehow made a bottom here? Could the markets continue to look for an uptrend from this because the triggers are likely to come in positive? Or do you think most of the good news is already priced in?
No, not really. I think most of the bad news is already priced in. So I don't
That's
see
fantastic.
market going down too much. Worst case scenario, some further announcement and tweets come from US. It can go down to 24,000 level, but not below that. On the other hand, we are reasonably confident that with some good news and some developments, positive developments on the trade front, we can look forward to achieving 26,000 kind of levels, which is close to all-time high before or around Diwali time.
Fantastic. All right. Thank you so much, Sudeep, for being with us on the program and helping us with all your market insights. Always a pleasure to have you with us. And let's look forward to what comes in tomorrow, and will that further the move that we are seeing on the markets as well. Let's quickly look at how the markets are looking to shut shop today. So we end yesterday's fantastic move today with some losses and some profits being taken off the table. Look at a 54 point of a decline that's coming in on the Nifty right now. 24,572 is the level at which which the Nifty is trading at. So we did see some buoyancy throughout the course of the day, but we have slipped to the low point of the day now after some profit booking has taken shape. On the Nifty, you do see Tata Consumer Products, Nestle as among the top movers, Power Grid, NTPC from the power space also hovering higher. Tata Group stocks like Tata Consumer Products and Tata Steel both are actually among the top movers right now. But when we look at the declines, look at Dr. Reddy's, M&M, ICICI Bank, Kotak Mahindra Bank. So the banks have actually taken some weight off the markets, and therefore you do see some pressure on the markets. Sectorally, FMCG definitely hoping big on the GST rate rationalization that could spur the consumption and the demand back home in India. So 1.2% higher for FMCG stocks. Metals are shining bright. Real estate, oil and gas, these are the stocks sectors that are actually moving in tandem as well. But let's look at the heavyweights like Reliance Industries. Remember, last 2 days, Reliance Industries had been under pretty much of pressure right after digesting the AGM news coverage. But today, we did see some buoyancy come in as far as the market move is concerned in the morning. But again, it fizzled out towards the end of the session as well. So that's the Ambani stocks for you. And that's how the markets have shut shop. Frozen at 24,574, 50 points lower in trade. So let's see what comes in. Probably the market investors are just keeping their cards close to themselves right ahead of the big bank announcement tomorrow. But beyond the secondary markets, there's a lot of excitement even on the primary markets as well. The IPO space I'm talking about. Market regulator SEBI has now given its nod to the IPO plans of Boat's parent, that is Imagine Marketing. The electronics brand, best known for its headphones and smartwatches, had confidentially filed its draft papers in April this year, backed by Warburg Pincus. The company is eyeing a valuation of nearly 13,000 crore rupees. As per the reports, this will be Boat's second attempt at going public after it had earlier shelved the plans for going for a 2,000 crore rupees IPO back in the year 2022. And on another story from the tech world, Apple has taken a bite of Bengaluru. The tech major has opened its third store in the country after Delhi, NCR and Mumbai. At Hebbal in North Bengaluru, India Today Group's Cyrus John Muthali visited the store, and he had this report to share with all of you.
This is Cyrus and I am coming to you live from Bangalore. But what's special about where I am right now, this is the third Apple store that has been launched in India, right here in Bangalore, where I will be giving you a walkthrough of what all Apple is offering with this physical store. And not only that, we'll be speaking with customers who have thronged into this place in order to get a first-hand experience of everything that Apple has to offer. But again, giving you a lowdown, this is, by the way, the third store that Apple has launched in India, the first one being in Delhi and Bangalore, and this is third. Another one is coming up very soon in Pune. But here is the experience that why people come to stores, is to experience Apple products, is to make sure that they get an understanding of the aesthetics, the software, everything that they need to know about Apple products, and then they can finally buy it. But here, the customers were lining up before even the store opened at 1 p.m. officially, and after which everybody almost here at the mall has entered the Apple store and getting an experience. You just have a look at what all is at offer. Every Apple product that you can find online and everything that Apple has made, you can come to the store and buy it and experience it. And that is what all an Apple experience is about. And to find the products online, if you have something that's on your mind and you want to buy it, you can always come to a physical store and then experience it.
All right, so good news there for Apple enthusiasts, a third store that's opened in the country as well. With that, viewers, it's a wrap on Business Today's show. You can send us your mutual fund, your asset allocation, markets and commodities queries that you have to us on the number that's flashing on your screens as well. And don't miss the market opening show tomorrow morning at 9 a.m. with Abha Bakaya, giving you the first word on everything that will move the stock markets. Thank you very much. Stay tuned.